What's up? What's up? It's your boy Corey B. So today I want to talk diversification, right? Okay, you've heard plenty of people. It's been said countless times. You need to diversify, diversify, diversify. Okay, if you're an investor, it ultimately, no matter what kind of different investor you are, or what kind of entrepreneur or business person you are, the concept is the same. Ultimately, yes, you do need diversification, right? Because you don't want all your eggs in one basket. Now, the problem with that is that don't force diversification. Charlie Munger once said, he said, what's wrong with having all your eggs in one basket if that basket is making you money? He's a wise man. It's true. What's the problem with it? If it's making you money, why is it a problem? The only problem is that if something happens. If. Okay, so there's always this if. What if something goes left? If all your money is in the stock market and the stock market is tanking, what are you gonna do? If all your money's in real estate and there's a problem in the market right now and the real estate market is crashing, what are you gonna do? If all your money is, and see, ultimately, I think the biggest problem is having all your money in one business. One business. That's it. Because ultimately there are going to be times where businesses go through transitions. There's going to be time where businesses have growth. There's going to be dips. There's going to be lulls. There's going to be any business. Any business faces obstacles because the business isn't 100% driven by the business itself. It's driven by the consumer. That's it. Now, there are plenty of businesses out there that are quote unquote recession proof. There's businesses that are going to thrive under any market, any circumstance, because ultimately people always need to eat. People always need a roof over their head. People aren't going to stop driving a car anytime soon, so they want gas in their car. And we've got plenty of different things that run off of gas. So there's certain markets that obviously are always going to be beneficial, but based on different legislation and different things in the economy, even those businesses can fluctuate. Even, like I said, even gas, even real estate, even food. Even if you're a farmer, there could be a bad season that's, it's like, oh, well, people always need to eat. Well, I'm a farmer. I've got crops of all different kinds, and I've got crops that grow in all different kinds of weather. But you know what? Something could just be off that year. There could be just something off in the fall season or the winter season or the spring or the summer. There could be something off that damages one of your crops, that allows it to, or not allows, but like hinders its progress, hinders its growth. Okay, you can find yourself in a circumstance or a situation where things aren't lining up the way you want it. And when you're building for your future, and see, this is something else I think of because I'm a dad, I'm a husband, I'm a father. I think about more than just my livelihood, but I think about the viability and the longevity because it's something that I want to pass down to my family. I'm not building just for myself. I'm building for my boys. I'm building for my wife. So I don't want to just have all of my business based on one thing because that one thing may not appeal to them. There's been certain things that I've done that the boys have gotten excited about. I was an avid reseller for several years, and Colton would be like all excited about it, and same with Corey. But there was certain aspects of that business that excited Colton. There was certain aspects that excited Corey. They had different personalities. So ultimately, could they take what I was doing and maybe partner, and Corey could do this and Colton could do that? Absolutely. But you know what? Is that something that's really going to be what they want to do over time? Maybe, maybe not. But as I'm developing into, right now I've got multiple businesses going. I'm growing in several different directions. I've got a partner in Anna. Him and his wife are absolutely incredible. Garrett and Gabby, they're amazing. And they're not only incredible business partners, but they're family, man. These are people that they ride or die. You know what I'm saying? Garrett's going to ride with me till the wheels break off, and then we're going to start running. That's just the way we roll. And we've got multiple businesses that me and him are working on. We've got different things that we got investments in that we're developing, because not only is it good for us, but it's a viable business idea and a business model that we can pass down to our kids. And that, you know what? If something ever happened to us, Kimberly, Gabby, even if they're kind of in behind the scenes right now, they could step up and completely take over and run what we're doing. Absolutely. And we love, like, they're not cut out right now. We love that they're kind of behind the scenes. Gabby and Kimberly are great support. They're our wives. They're our best friends. They're our support. They're intelligent and creative. So they got great ideas, and they help us to grow and develop these businesses that we're developing. But while they're helping grow, like I said, they don't have a desire to be on the front. They don't desire to be the face of what we're growing right now, which that's okay. They don't gotta be the face. Not everybody wants to be the face of a company, of a business. But what we're growing and developing is something that they're happy to jump in and say, okay, you know what? I got this. I'm gonna take over this now. You know what I'm saying? Because anything can happen. You want something sustainable for your family. And as we're growing, like I said, some of these things that we're growing and developing are not just good for us and our wives, they're also good for our kids. Both of us have several kids. I have 2 little boys. He's got 3 little boys. I'm sorry, he's got 2 little boys and a little girl now. Apologies. And this is something we're going to pass down. We're going to leave a legacy for our children. And we're incorporating who we are. We're building our businesses based on our personality, based on our style, based on our faith. All this stuff is being incorporated. It's what makes our businesses different. Now, I got my partner in Austin. He actually, my boy Z. This is my brother, man. This is my homeboy. I mean, we've known each other for a long time. We've done lots of consulting with each other on different businesses that we've done. And we've done lots of investing together. We've got a lot of things in development. And a lot of the stuff that we're doing right now, other than just trading and investing, we've got some projects in the works right now that aren't quite ready to go out to the public yet, but they're in developmental stages. And the thing is we're building this not only for ourselves and our families, but just like me and Garrett, me and Z are developing things that we can branch out to our communities. You know? So to me, like I said, I think bigger. I can't help it. That's just how I operate. I operate on a bigger scale. A lot of this has been instilled by my mom. Just the way that she designed me. Like, she never... There was times when we were struggling, and there's times when we weren't. She never really let me know the difference when I was growing up. When I got older, I could look back and see. I could see it now. I could look back and say, oh man, those times was hard. But to me, as a kid, I didn't know they were hard, because she just had this way about making anything an adventure. But the thing is whether times were hard or times were plentiful, didn't matter. When she would cook, we'd have a cookout, we'd have a grill, she'd be cooking in the kitchen, she'd make, whatever, she'd have stuff going in the crock pot, stuff going on the stove, whatever. She'd make sure that me, my brother, my sister, all 3 of us got fed. We were all fed and we were happy. But if it was down to that last plate, we were all fed, and she knew that our neighbor was struggling, our neighbor was in a bad place, a friend of hers was hungry or sick, she'd make sure they got a plate. You know, she just had this desire, this love, and this passion in her heart to want to help others. She wasn't going to sit back and just enjoy a bowl plate if she knew that somebody else was hurting and they was sick, they was hungry. She was going to make sure they were taken care of. And see, that's something that, has been instilled in me. And that's something that's, Garrett and Z, they got their own stories. But that's something that's a part of who they are. They want to help. It's not just about what they need and they want for their own family, but they want to build something bigger and greater for those around us as well. So that's why we got a lot of things working, and there's a lot of moving parts. But at the end of the day, like I said, we're not putting it all in one place. Like I said, not just for the benefit and the safety net of what if something happened, but we're also doing all this because we want to make sure and build plenty for our family, have multiple revenue streams, and we want to be able to contribute something greater to society, something greater to the community around us, not just leave a lasting legacy with our kids, but a lasting legacy in our community around us. We're going to leave a mark that we were here and that we did something great to pass on to others so those others can do something great. Now see, I'm telling you, man, I think big. I don't think, I don't know how to think small. It doesn't work for me, that's why it's great to have partners, because we all think different. And Kimberly, she helps balance me out. The boys, they help balance me out. Garrett, Gabby, Z, my inner circle helps balance me out. We all balance each other out. We propel each other forward, lift each other up, and help balance out those nuances of our personality so we can hit a greater success. Because to me, like I said, I'm not arrogant enough to think that I'm gonna change the world. I don't know. I don't think I'm gonna change the world. But what I do think is I have the potential to influence the person who might change the world. I just might. I just might influence that person or that person or that person. And they might be the one who changes the world. They might just literally turn things around. Like I said, when we get back to this diversification, I do it for so many other reasons. But I'm advising you, yes, absolutely, you should be diversified. But with that being said, diversification could be much more simple than overcomplicating it. Okay, so too many people are like, well, they get on there, they speak to a financial advisor, or they get on one of their little apps. Like Robinhood, which I frown upon, don't use Robinhood. Or Webull, Webull's a good one, Stash is a great one, but they get on their little app that they're investing in a stock, right? And they're like, well, according to the analytics in my app, it says I'm not diversified enough. It says I need more of this, or it says I need more of that. So because they're advised to diversify in another area, that something's they're missing, they choose to either ignore it. A lot of people don't even check that stuff. They ignore that stuff. But and if you ignore it, that's fine. I'm not, sweating that. I'm more concerned about the people who don't ignore it, because they choose to take advice that they don't understand. That is a problem. If it's going to say, well, you don't have any, you're not diversified in this area over here. You have nothing in, minerals. You have nothing in oil. You have nothing in specialties. You don't have anything in the medical or pharmaceuticals, or you don't have anything in, so it branches out these little different categories that you're missing. And when it tells you that you're missing and you decide to take that advice, but you don't understand it, so you're like, well, I gotta buy some gold. I don't have any gold. Oh, I gotta invest in I don't know. I gotta invest in this medical development company, or this pharmaceutical company, or I gotta invest in this insurance company because it says I'm missing it. Why does it matter if you're missing it? It's giving you a suggestion. It's allowing you to know that these are areas that you don't have, but it's not telling you, and it can't tell you that you need to or have to do it, because ultimately it is your money. You put it where you want to. You've worked hard for it. You've earned it. Make sure that you're putting it to work. But when you put it to work, make sure that you're educated. Make sure you're reading up. Make sure you're understanding. We've talked about this so many countless times, that it's like, ultimately, do not put your hard-earned money somewhere that you're not invested in. See, because you're going to invest your money, yourself better be invested into it also. You better know it, you better understand it, you better believe in it, you better see its potential before you just drop your money in it. Investing your money without investing yourself is not wise. So those are the people that I'm concerned about. Those are the people that ultimately they put their money in areas trying to diversify, but then they lose money because they didn't know what they were doing. They didn't understand the process. They didn't understand the companies they were buying into. They were just trying to follow this algorithm of percentages of what they need. There's a simple algorithm if you really want to, if you really want to get to the level of a seasoned, experienced, disciplined investor. Here's an algorithm. Very simple. It's 20%. That's it. That's the algorithm. At 20%. Whatever you're investing in, if you're a seasoned, experienced investor, then you're investing in this, you're investing in that, you got some in medicine, you got some in real estate, you got some in gold, you got some in the stock market, you got some in crypto. No more than 20% of your wealth, of your capital invested in any one spot. That is the key to diversification. That's the algorithm I want you to follow. I don't want you to feel like you've got to have some in every category, because certain categories may not be your wheelhouse. They may not be something you understand. You may not really understand how insurance works, what the benefit, or you may have a moral conflict with insurance or medicine or real estate. Like, if you have a feeling towards any of these categories and you feel like, well, I'm trying to be an investor, I'm trying to diversify, I'm trying to grow my platform, my portfolio, and really just get out there and make sure that I've got my money working for me. But there's, I've always felt the type of way about these real estate moguls or whatever. I don't want to be a part of that. Okay, fine, don't. And I'm not even saying I agree or disagree. I'm saying that if you feel a type of way, don't get involved in it. If you don't want to be a part of pharmaceuticals or medicine in general, even any research and development, you don't want to be a part of that because you feel conflicted. Don't. You don't want to be a part of insurance. Whatever it is you feel, if you feel in some way conflicted, morally, emotionally, whatever, it doesn't matter. Don't put your money in something you don't believe in. But you can diversify in other areas without compromising who you are. Compromising those things. Don't compromise to make money, because you'll make silly mistakes because you don't understand what you're compromising for. Oh, well, I know medicines get big money. I can make some big money, but I don't like those people. But I'm going to put my money there because I can make big money. No, because you have that idea that you don't like those people. You're not going to research it well enough. You're not going to understand it well enough. You're not going to know what you're buying into, and you're not going to know where your money's going, and you're not going to know how you're going to get it back, and therefore you're not going to actually reach your potential in that market. Same things goes with any market. The foundation and the key always is to get informed. Learn, research, study. Study. Read. Buffett is one of the greatest investors of all time, arguably the greatest investor. And he says to this day, he's reading a new book every week or every other week or something like that. And now there's certain things that he may not, read cover to cover, but he's constantly reading, he's constantly educating himself, he's constantly learning. I'm not the fastest reader. I can't do a book a week. I can't even quite do a book every 2 weeks. Got a lot going on, and I'm not the fastest reader. I'm a good reader, but I know how to read. I can read well. I just don't read that fast. Now, Kimberly, she can plow through a book in 4 or 5 days. I don't know how she does it. She's a speed reader on a different level. But look, the key is get informed. Be educated. Know what you're investing into. Know what you're buying into. Know where your money's going and how it's going to work for you. And don't overdo it. Don't think you have to spread yourself so thin that you've got money all over the place in every different category, because it doesn't necessarily matter. If this basket is profitable, if this basket is profitable and beneficial, what does it matter if your bank's all in that basket? Like I said, I encourage diversification, but don't ever force it. It's not that serious. You've got to know where your money's at. You've got to know how you're going to make your money. You got to be informed. And to me, it's just got to matter to you. Go with your gut. Go with your heart. Go with who you are as a person. Everything that I'm investing in, I believe in. Everything that I put my money into, my heart's in it. I'm passionate about it. I believe in what this company's doing. I believe in what that company's doing. I believe in the things that me and Garrett are developing, me and Z, me and Kimberly, me and the boys, everything that we're working on. I believe with my whole heart in the process, in the goal, in the outcome. I believe in it. If you don't believe, or if you don't understand, it's not worth the gamble. You got a buddy who hits you up and says, dude, I invested in this stock. I am making a killing. You got to get in on this. Do you trust him to be your financial advisor? Now, if you trust him, you believe in him, you could give him a piece. Say, hey man, I got a little extra money saved over here. I'm going to give it to you. You make that happen for me. But for you to go into it on your own, if you don't understand it, you don't know it, you could put your money in there and you could see it going up and up and up and not know when the right time, and then all of a sudden it tanks and you lost it and you didn't know what you were doing. You didn't know what you were doing. Like I said, you've got to know what you're doing. You got to be willing to educate yourself. You got to be willing to gauge your risk management. With this another video that I just posted, I believe last week. It was a great video. You didn't see it, go back and view it. Risk management is important, man. You got to understand what you're doing, and you got to gauge your risk. And any money you put out there, you got to know the probability of the return and what kind of return you're looking at. So like I say, don't force diversification. Diversification is important, absolutely great. It's good to be invested and leveraged in several different categories, several different areas. If you're really wanting to grow your business and grow your portfolio and be, like, look, I am a disciplined investor, then that's the key word, discipline. You got to be willing to take the time to be disciplined about each thing, each step that you take and each move you make, and not get yourself into a position where you're like, well, I heard that I should, and I was told that I need to, so I did, but I don't really understand what it is I got myself into. It's a bad place. Don't find yourself there. So look, like I said, when it comes down to it, it's money. It's simple, it's money. But your money should matter to you because your money you worked hard for. All right, it's your boy. Give me some love. Hit that like button, hit that subscribe button, ding your bell, get your notifications, and leave some comments below. I've had plenty of y'all hit me up on TikTok and Twitter, Instagram. Some people have messaged me privately, but leave some comments below about things that you've invested in, or different side hustles or platforms or businesses, different things that you've seen that you can do. Because I think by putting some different ideas out here, we can start an open dialogue where more people, converse. More people are gonna see the potential of growing in new areas. Maybe some of us out there didn't realize that thing that they it's like you're gonna put something down. Oh, you should invest in. Hey, I know about that. I just didn't even really think of that as a business model or a side hustle. Yeah, let's start talking. Let's open up this communication so we can help each other grow. All right, y'all have a blessed day. Y'all keep getting it done. Let's keep growing and learning and lifting one another up. It's your boy. I'm out.